Hello and welcome back to the Sporting Crypto podcast. I am joined by a great guest today, Tad Smith, who is now the MD, CEO of Caddy Digital. Is that correct, Tad?
CEO, yes, that's right.
There we go. And for those that don't know, you've got a pretty amazing background. I'd love you to walk us through your career.
You want to go forwards to backwards or backwards to forwards?
Backwards to forwards is always best. I love that meandering story.
Okay, so most recently I was a partner with Dan Tapiero's 10T Holdings, which is now called 50T. And that is really the only scaled growth equity firm in the crypto space, and spent a number of years there. Before that, I had a period as CEO rolling up the privately financed in-home care business. And before that, I sold Sotheby's, the worldwide auction house. I was the chief executive when it was a public company and ran it for just shy of 5 years and sold it in 2019. Before that, I was the chief executive of Madison Square Garden. That is, of course, the home of the Knicks and the Rangers. But back then, it was also a cable network business, which has since been separated. And obviously, the venues, Radio City, the Rockettes, all those different things. And before that, I've been 10 years at what's now called Relics. Back then, it was called Reed Elsevier. And that is a business which is the intersection of media. Oh, sorry, I skipped one. I was also the president of the media division of Cablevision, where I oversaw the launch of the high school sports network. I oversaw the News 12 operations, a number of newspapers, including Newsday and AM New York. I can't believe I skipped that. That was sort of a great 5-year run, actually. And then before that, spent 10 years overseeing the B2B media business, publications and data in the United States for Reed Business Information. I've also been in the music business. Before that, I was at BMG Records. So that's actually the first time in the music business. Of course, the second time was at Madison Square Garden, where there's a huge number of concerts and other things. And I've started my career at McKinsey & Company. And I think I'm skipping one or two. But at any rate, the point is I've been a CEO or president of a company for 25-ish, 30 years, something like that. But all of them tend to be the intersection of some new disruptive technology and a legacy business. And that's a key unifying theme. I particularly love businesses where creativity is involved, where you have something, and I don't mean creativity in a generic sense, I mean creativity where it's a business that is around content or creativity and it's getting bombarded by some sort of disruptive technology.
Well, hey, Intersection's my middle name at this point. It's what we've used for Sporting Crypto's tagline since the beginning. So you and I must share some brainwaves at least, which is good. Good for me anyway. I don't know if it's good for you.
I think it's very good for me. It'll be averaging up on me, as you'll see shortly.
And where did the interest for crypto come in? I'd love to get your point of view in the story there.
Well, I've been a collector of stuff since I was a kid. And so the notion somehow that things that don't produce cash flow could have value or be stores of value is not a new idea for me. And of course, when I ran Sotheby's, when you're selling a painting for $20 million and basically it's a piece of canvas with paint on it, you definitely have to be able to understand that things can have value and increase in value even though they don't produce cash flow. And a friend of mine, a close friend now, who then worked with me at Sotheby's, introduced me to Bitcoin at the time. And I bought a little bit. It went up. I sold it. I was happy. But the underlying thesis of money really, really transformed itself when I ran Sotheby's because the notion of stores of value were critical. I forgot to mention, by the way, I've also been an adjunct professor at NYU Stern, a second-year business school class for, buckle your seatbelt, Pet, 25 years. Can you believe it?
Well, as someone who's turning 30 tomorrow, that's a long time.
Yeah, well, most recent version of the class, by the way, is now all about AI and human creativity, and AI is required in the class. So I spend my time today I spend my time investing in AI, robotics, tech, and crypto, of course. So, but Bitcoin to me, honestly, I would say I was really orange pilled by Michael Saylor. Went down the rabbit hole some years ago with his podcast, which I think were extremely effective, and began thinking about the whole space and what it really means to deal with liquidity and money printing in a world of value.
Let's talk a bit about Candy. I guess.
Well, I hope we talk a lot about Candy.
But I mean, the precursor.
You can turn
to
it
you.
off at any time, but I'm prepared to talk a lot about Candy. It's been on my mind 24/7 for months. This is like a therapy session for me. I can't wait.
So I want to start with, comes out the gates, a lot of investment, sees a lot of volume with the NFT hype bubble, bit of a crash, bit of a lull, Rubin divests, and then eventually there's the kind of attempted merger with, from my understanding, and again, like some of this is public, some isn't, with some chains, with some other IP digital studios, and then eventually rolling up into Futureverse, who went into receivership probably a few months ago now. And so a bit of a turbulent time for them as a business. I know a lot of the people there, well, formerly there, and a lot of good people. Shame to see how it shaped up. I'm presuming that your relationship with Candy is one of a personal collector at first. And so I'd love to hear your perspective from the outside in up until the point where you're like, okay, I want to step in now.
No, Pat. As a matter of fact, my relationship to Candy was as a partner at 10T stroke 50T, now called 50T Holdings. I was initially a board observer because they had a small stake in it on the Candy board, and then ultimately joined the board, and also merged it into Futureverse and was on the board of Futureverse. And so I had a view on it for the last sort of two and a half years, and obviously was unhappy with the trajectory. I don't know how else to say it. In the case of Candy, how I got more involved, which is, I think, the more interesting question, is when it became clear that Candy was an entity inside a New Zealand company that was under restructuring and was going to be very difficult to finance. The prospect of having the digital assets that Candy had on behalf of collectors get shuttered in some sort of restructuring or assignment with benefit for creditors process was really, I don't know how to say this, just really not attractive to me. I don't know how to say it. I mean, it just wasn't going to work for me. And so I decided at that point, I have to find a way to bridge our collectors to some version where they don't lose their assets. And so it started on that path, which is, and by the way, there were many key Candy executives that were on the same page. They just didn't have the money to do it. So I started digging into my own pocket to pay for this. And I kept a wonderful team, a small mini team. And by the way, Futureverse was on the same page. The Futureverse management team was completely with me on this, but they couldn't afford to do it, but I could. So we started funding an effort to make sure that before Candy went into assignment with benefit of creditors, everybody who had their assets would be protected. And so, and I knew I wasn't going to get a return on it. I wasn't looking for a return at the time. I was just thinking, something has to be done here, and I'm lucky enough to be able to afford it. I'm just going to do it. So along the way, I got deeper and deeper and deeper into the Candy situation, and also began asking questions more broadly about the NFT market. And I simply couldn't understand, and by the way, this is now late 25, probably knocking on the door 26. So we're talking 5 months ago. And began asking questions, I don't understand why this business can't make money. And moreover, I got a little bit lucky, and I'll tell you what the luck was. The luck was when Claude Opus 4.5 came out in late November, I think it was November, if I'm not mistaken. And then, of course, OpenClaw came out on the 5th of February of this calendar year. It began radically causing me to rethink, or caused me to rethink radically what the cost structure of one of these businesses should be. And so and by the way, in combination, so I began asking that question as well. And it further emphasized to me, well, you know what? I don't understand why this business can't make money. So what happened is I decided I think the business could be restructured and make money. And then by the way, in December, I resigned from all my fiduciary responsibilities and was clear with everybody that my situation had changed and I was potentially an acquirer candy. And also, I thought that it would be an elegant way to resolve things. And meanwhile, I'm lending money into what is potentially going to go into a zero situation, lending money to fund everybody's collectibles to be migrated, and it just evolved from what was going to be a sort of a rescue plan into, oh my gosh, I think this can actually make money, and I think it should make a lot of money. And by the way, I'm really getting very bullish on it. Oh, by the way, there's this really talented team here. And I'd like to give it a go. I think it's extraordinarily high risk for reasons you know all that well, Pet. But I'm going to give it a go. And by the way, I haven't looked back since. That's actually the story, and I've never really told it. So there you go.
That's great for us to get some alpha there. But it's also very old school of you to want a business to make money. I know that's quite alien to a lot of people in this space.
Well, it needs to make money because and by the way, when it makes money, people get this confused. It's good for the licensors. It's good for the employees. It's good, frankly, for the collectors when it makes money. They want a sustainable platform that they can interact with that is self-sustaining, that provides them with value.
I'm thinking about this from one or two ways. On one side, you have a lot of collectors that have already poured money from their pockets into buying these digital collectibles licensed by major IP. You also have the liabilities to the IPs to a certain amount of time. What is the gear shift to kind of get Candy back on that trajectory of driving enough revenue to ensure that, as you said, the collectors are happy, employees can be paid, but then also the IP licenses that are granted, which aren't cheap, can be paid for long enough to continue driving that revenue flywheel?
Will you allow me, Pet, a momentary excursion before answering that question directly to describe the problems I saw in the marketplace that we're systematically solving, or I'm endeavoring to solve, to create the outcome that's the answer to your question. Let's do problem number one. And that is licensors demand enforcement of royalties on the secondary market. And by the way, when I say demand, I mean demand. This is not negotiated. This isn't just maybe. This isn't okay. It's not like that. It's they demand it. And by the way, they should demand it. It is absolutely right. It is their IP, and they should get it on secondary sales, not this week, not next week, forever. And so the way people have traditionally tackled that problem is by creating, because by the way, Ethereum is very difficult to do that. There was not recent until very, very recently, and I'll come to that in just a second, a way to do that at the protocol level. You could potentially contract with a third party to do it, but then if you evade a third party secondary market, but if you didn't do that secondary market, you did on some other secondary market, the royalties were not enforceable. So unsurprisingly, the IP holders would insist that you had some sort of approach that would guarantee royalty enforcement. The way people have done that is by creating little blockchains with secondary markets that are in a walled garden that are captive, and then they could manage both the buyer and the seller. Well, the problem with that is, one, you have very, very thin liquidity, and number two, you have you have a blockchain that is an L1. You have a blockchain that may or may not be here next year. You have a blockchain that doesn't really give you self-custody because, well, once you go out of the self-custody, you're out of the system, and then you could potentially not enforce the royalties. that's an extraordinarily expensive endeavor. And to have a secondary market that has very, very low liquidity is not a good return on capital, believe me. It is a way to lose money fast. So point one is and the one we're using is Solana's Metaplex Core, which was really, it's about a year old. We're migrating everybody to that, and it has royalty enforcement on the secondary market at the protocol level. So we can enforce it without being in the secondary market, which means all the overhead at Candy that was associated with the secondary market, a thin liquidity thing, goes away. Crucial point. Secondly, the business of creating, producing, selling, and distributing IP content has suddenly, in the world of AI, become extraordinarily inexpensive. And this is a crucial point, because if your month-over-month burn rate is quite low because you're using AI very effectively, you don't need all that many people. And the result, and by the way, on the tech side, you can go from 36 people in the tech department to 1 or 2, literally. What that means, Pat, when you combine it with the prior point, is that you had an expensive secondary market you were supporting in a walled garden that didn't have liquidity and nobody wanted to put money into it, into no secondary market in a walled garden. We'll come to that in a minute. Cost structure plummets. And then you realize the third key thing, which is what creates value here. And that is the collector's secondary market. The most healthy thing you can possibly do is have a secondary market where the value is increasing and the velocity is increasing, not the primary market in the initial drops or sales. Why? Because if you are trying to cover overhead from the primary market, you're going to have to push more product out, which creates inflation. Everyone in crypto understands that inflation without deflation creates too much supply, the price drops. Moreover, it crushes the secondary market. So what you want is a tight, scarce primary market, and you want a robust, flourishing secondary market on an L1, such as I'm using Solana. And as long as the protocols enforce royalties, it's a winner. So, and low overhead, which you can do with AI. So all of these things came together, and I said, oh my gosh, I think we can make a lot of money here. And moreover, I think we can create self-custody, scarcity, and a secondary market that flourishes for the collectors, which is exactly what they want. Will give them confidence to spend more on the assets. They can pull it, put it on their ledger, and take it away with them if they want to. And by the way, if they want to sell it 10 years from now on the secondary market, we'll charge them a modest fee, and we'll split that with the licensors. The licensors are happy. That's it. That's we go from call it a doom loop with low liquidity, walled gardens, third-party secondary or third-party blockchains that maybe you've never heard of before, to a L1, highly liquid, scarce, collectors-oriented secondary market that goes up and to the right. That's the concept.
If I had to summarize, we're talking about infrastructure, enforcement of royalties, reducing or collapsing overhead costs across the entire business, and then 4, basically looking at the collector economy, so to speak, when we're talking about inflation and deflation.
Scarcity and liquidity. By the way, the other thing I should just point out, it should be more fun to buy this stuff. I mean, I don't know why crypto came up with drops. Who knows? Look, I've seen drops. Drops can work when you understand what the supply and dynamic is, but people are just guessing. They just put stuff out there and see if it sells. In a frothy market, it works. In a world where you don't know what is going to sell, you should try auctions. They're pretty sexy. They work really nicely. There's a reason why the oldest existing companies in the world are auction houses.
Something human about outbidding someone, isn't it?
There's something exciting about the chase. So we'll be doing those too, obviously.
This podcast is sponsored by the Hedera Foundation. The most beloved sports brands understand that what fans want is simple, a reason to be passionate. The Hedera Foundation enables brands and fans to share their passion on-chain using the Hedera network, the most used sustainable enterprise-grade DLT for the decentralized economy. I wrote a little while ago, and actually not that long ago, about Panini having a bridge to Ethereum on OpenSea specifically. And I found that really fascinating. Obviously, that's a bridge, not right into the protocol layer, right? Because obviously you can't enforce royalties on Ethereum itself. I found that really interesting. And so from your perspective, with the infrastructure route that you've chosen, the way that you're using Metaplex Core on Solana was basically the most cost-effective way to achieve the kind of enforcement of secondary royalties, right?
Not the most cost-effective way, the way that we could be sure. I am not aware. Now, notice how I'm framing this. I'm trying to frame this very carefully. I am not aware of another option that embeds it in the protocol. And I believe there is one for SWI. I'm not aware of another one. And in the case, but I'm not sure there is one for SWI, but I'm not aware of another one. And guess what? I don't feel comfortable with licensors unless I can embed it in the protocol. So I made a strategy decision based upon the recommendation of the tech team that looked into it about that being the best solution. Now, I saw what you're referring to. I don't ever talk about competitors, except for that one. I will say I actually have great respect for Panini and great respect for OpenSea, and think they're probably going to do really well. I also believe, I'm going to keep my fingers crossed, that OpenSea makes it possible for Solana NFTs to trade on OpenSea so that our folks can also trade there. But, I'm going to keep, as I say, fingers crossed. And I'm going to keep my fingers crossed that Ethereum makes it possible to protect licensors and, frankly, art creators, too. Let's talk about the creator economy, and embed that in the protocol as well. So don't hear me as not embracing any of those. I am. But at the moment, the only one that satisfies my criteria is Solana and the Metaplex Core.
It chimes to something that I think a lot of people looked at the NFT bubble and thought the bubble burst because it was a bubble. But actually, one of the key drivers to that was the lack of enforcement of royalties, because it deterred a lot of non-crypto native creators and artists. And I know a bunch of them, right? And probably 20 times more than me. And they just no longer wanted to create because the thing that made that sustainable as a business model was just completely deterred by, frankly, opportunistic platforms that drove fees down to zero, and the existing players had to follow or their businesses would die. And the ones that were, left holding that buck were the creators, unfortunately.
100%. The other thing, of course, is they forgot what we all learned from Bitcoin. If you don't have scarcity, then supply shifts out forever. And by the way, the more you try to drive revenue up, the more you shift supply out, and the price collapses. And if the price collapses and supply is in effect infinite or creatable, then ultimately you have a real problem in terms of the secondary market, which means there isn't one.
One of the things about the collectible space right now is that it's definitely being, especially on the sports side and the Pokemon card and blah, blah, it's being dominated by the RWA market, the on-chain collectible space, right? Which is super fascinating. I think off the top of my head, if you look at volumes, if you look at revenues, if you look at gacha sales, if you look at post-gacha buyback revenues, they're all up about 4 to 7x year on year, which is pretty big. And if you go even further out to early 2024, it's probably 10 to 15. What do you think about that space? And obviously, Candy is in the market of digital collectibles, but you must be peering over the fence and looking like, wow, that is still flaming hot. Is there a temptation to do anything around that? Or is that more difficult because you are more of a primary issuer, if that makes sense?
I think that's a wise way to put it. Our focused area of business right now is in primary issuance of collectibles. We're not in the custody business. We're not operating a secondary market. We're making it possible for a secondary market to thrive, and we're encouraging one. But that's really it. Now, yes, could we grow into other business? Of course we could. But we don't need to in order to make plenty of money. And moreover, We don't need to, in order to serve our licensor clients really, really well and create a great ecosystem for the collectors, who we call our fans. And so I'm really very focused on that. And by the way, we're talking about a big market. Let's just throw out baseball cards. Baseball cards, I think the numbers I saw are a worldwide $12 to $13 billion trading. That's flow, not value. $3 billion in the US. Those are big numbers. And if we just did baseball alone really well on the digital side, good things will happen.
There's something interesting, right? I remember interviewing someone, I would say about 3 years ago, and they were like, well, look, like the collectibles market is still pretty small. And I was like, it's small, but that's mostly because of liquidity and the friction of actually buying and selling, right? Like if Pet in London, Tad in Florida, if I sell you the signed Arsenal jersey on my wall for $1,000, we have to trust that it gets to you. You have to trust me that I'm not defrauding you. There's a lot of things that could go wrong between the buy and the sell. Oh, and by the way, you're in Florida, it might take 10 days. And so the number of owners possible for some of these collectibles is actually quite low in the traditional market, which constrains the actual market size. Because if you only have let's say in the next 100 years, 30 people that own this signed jersey, the market is kind of reduced, even though it feels scarce. Whereas on a Courtyard or on a Candy Digital or on OpenSea, whether it's because of traders or because of buyers and people being able to be more liquid with their sales, you kind of create a more vibrant ecosystem from a market perspective.
100%. I wouldn't change a word. It's literally that. And you would expect the moment you provide for security, self-custody, actual ownership, and then store of value goes up, and you would expect velocity to follow. And what you were describing was frictions in velocity, and those should go away in the digital world as soon as you have security and scarcity.
And what's been the reception from the community, the collectors, people in the space since you've kind of announced the takeover? Have you had any feedback that you've actioned? Has there been anything that you thought was a really good idea until you pitched it outward that's kind of changed the roadmap? Or has it all been pretty positive because it has been kind of like from a position of there might not be a platform to, hey, this person's actually going to build something here?
Well, there's certainly. I mean, I telegraph everything I'm doing widely on X and Discord and other things, as well as email. So it's I basically say exactly what we're doing in advance, and you can imagine people have different points of view on it. And I would say overwhelmingly, it is courteous, cautious optimism. And what I mean by that is, look, you all have let us down several times recently, and let's we don't need to trust you, but we're just going to verify if what you say you're going to do is what you're going to do. And so I'm endeavoring to do exactly what I say I'm going to do. One of those things is on June 1 or on or about June 1, might be a couple days because we want to get it right. We're going to relaunch the site. People are going to have self-custody. People are going to be they're going to have a wallet. They're going to have their Solana Metaplex Core based digital assets in their wallet. They can take them with them. We've got a burn program underway now for those who are interested in that. And we have had a re-engagement of active fans or re-engagement of fans program underway that expires on May 20th. Every single thing that we said we were going to do, we are doing. And so I think the most important thing is we just say what we're going to do and just do it. And if we need to pivot, and we've pivoted multiple times, but only in little ways, we might have a big pivot if we think we're off track. We don't at the moment. We think we're on track. So we'll see.
And what's been the reception from the rights holder side?
Well, our largest licensor, well, first of all, licensors really care about their fans. They really do. And Pat, unsurprisingly, anyone who is willing to spend his own money to correct a situation for the fans is going to at least warm their hearts, right? I mean, I mean, wouldn't you? I mean, they're these are really our licensors are really decent people, and they care absolutely fierce. They are very strong advocates for their fans, and so they are. And by the way, we're abiding by the licenses. One of the first things I did is paid all the royalties due. And the second, I told them exactly what we're going to do, told them exactly where we're going to go, told them exactly how it's going to affect their fans, and their fans are happy, at least cautiously optimistic and courteously optimistic, ranging to happy. There's some people that don't understand or grumble a little bit or think we should do this or think we should do that, but it's mainly in the things, well, if you're already doing this, why couldn't you do this? Because it'd be better for me, that kind of level of complaint, which is fine. We welcome it. So I think they just are expecting us to do what I said we're going to do and waiting to see that it happens.
The kind of broader market for digital collectibles, purely digital collectibles, is still fairly depressed. Or, on one hand, you could look at it in isolation as still pretty thriving, or depressed compared to the big peaks we saw in early 2021. How do you kind of see that going? Or do you think that because Candy is a IP-oriented platform and business, that it's actually not really apples to apples comparison when looking at the macro?
Well, it's broken for the reasons we said, right? If you have to if you're digital collectible, you don't have self-custody, then you don't really have ownership. If you don't have embedded scarcity, then the value of your collectible is subject to inflation, and a lot of it, by the way. And by the way, these are crypto people. These understand what inflation means. They get Bitcoin. They get the whole concept. If you don't have security, then you don't have real ownership. And if you don't have and by the way, if you don't have liquidity in the ability to sell something, then you don't have any confidence in the price you're going to pay. So if you wanted to ask what are the factors that would create a perfectly horrible macro environment for digital collectibles, bang, 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 you just identified every one, Pat. So what we're trying to do at Candy is solve that. Those are exactly the macro factors. Each of them is structural, that we think we can solve. And by the way, in the world of AI, where the cost structure to do these kinds of things plunges, we think we have and by the way, not just this isn't just about us. We think the entire industry has an opportunity to reset itself and go back to what really works for Bitcoin, what really works for fine art, what really works for playing cards, the physical version, minus the frictions that you correctly pointed out. All of those should be working really well with digital if we just get back to first principles.
Tad, this has been awesome. Is there anything we haven't covered that was top of mind coming into this that you want to get into?
Well, we haven't said much about non-sports digital collectibles. I don't know whether you want to cover any of that, but I have to say I have a big newfound affection for Batman, because Batman cowls, I have to say, I have never seen anything as exciting as Batman cowls on everything. And so figuring out how to think about the non-sports digital collectibles is really crucial. And the only other thing I would say, and we're definitely working on that, and the last thing I would say is, I know we're talking about sports and sports, anybody who used to run Madison Square Garden obviously loves sports. But one thing I would say is this also applies to art. And there are some aspects of sports collectibles that are actually art and really seriously fine art. And so we need to solve this not just for the licensors and the collectors, but we need to solve this also for the artists. And until we do, I think we're going to have exactly the kinds of bad outcomes and bad macro environment that you described. And the only other thing I'll say is, clearly, I think my wife is waiting for me to get outside and help clean the house. I mean, this has been kind of a crazy podcast. I'm so sorry about that.
No, you're all good. You're all good. Hey, where can people find out more about you?
The easiest place is on X. It's at TadTweets, TadTweets. And I'm on LinkedIn And for anybody who wants to send me an email, it's tad.smith@candy.io. Candy.io.
Brave man handing out the email, but I dig
it's
it.
already on X anyway. And by the way, I actually read all of them. So I don't necessarily reply to all of them, but I definitely read all of them.
I can vouch. He gets back to you very quickly, which is impressive. This was awesome. You can find us at _sportingcrypto on X, sportingcrypto.com on all browsers. You can find me on LinkedIn at Pet Barisha and on X as well. And you can subscribe to the newsletter directly at newsletter.sportingcrypto.com. Remember, none of what we have said is financial advice, business advice, tax advice.
None of it's financial advice. We don't give it. Advice. You don't give it. Nobody gives it.
Any type of advice. Any type of advice.
Absolutely. Thank you for the reminder. Oh, and by the way, I should point out that my opinions are my own. They don't reflect any other owner, including my wife, of Candy or any other of the employees there.
There we go.
Or the licensors for sure. So
definitely not those. Of course, all opinions are our own. Thank you very much for watching, listening, wherever you consume this, and we'll have more sporting crypto content for you soon.